Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only and should not be considered as personalized financial, investment, or trading advice.
Welcome back, traders. Today's date is the 23rd of August, 2025. Time is about 9 p.m. And just sharing my weekend market analysis with the trading community. So we want to analyze the equities, the SPX 500, as well as the NASDAQ 100. And I usually will look at what gold is doing as well in this session. So without much ado, let's look at the chart. And this time I'm going to start on the lower time frame. I'm going to start on the 4-hour intraday chart and work my way out to the weekly, because recapping our call for last week, we got a little spoofed. Okay, so we got our first side of the trade correct. The pullback was based on the divergence on the daily chart. I just wasn't expecting the pullback to be this deep, as on the daily chart we actually did come below the 21 period moving average, and we closed below it. That was a huge concern for me on Thursday when I re-evaluated the chart. Now, a little patience would have proved our analysis to be in the right call, as we were expecting the pullback to come into a support zone, and I think this was my support zone. Yeah. So we did come way below the support zone. And so now this area becomes a resistance. As a matter of fact, see if I could do that whilst I present this. So now this area becomes a place of resistance, no longer a support, but a resistance. So yeah, with this area broken, and now we have come back to test this area that we broke out from with this strong candle on the daily. What I'm looking for next is actually based on the 4 hours. That's why I want to start from there and work my way out to the weekly. So on this 4-hour setup, what I'm observing is that because we are back into this area of resistance and we are beginning to show, some rejection of value here, despite the strong momentum that took us there on good volume, strong volume as well. The problem I do see here is kind of a hidden bear on the chart. Okay, so this is our high. We've come to about the same high. Now come down to your indicators and you see the hidden bear that I'm talking about. So there's one of them here. If you look at this close, okay, where your RSI was just about 43, and you have come about the same level and your RSI is already at 82. Okay, this potential setup is how the hidden bear would show up, where the indicator goes to make a higher level, but price is just about a reference point that is of a lower RSI level or MACD level. So there is one on here, but yeah, there's a hidden bear on here that did work itself out. But this hasn't been confirmed. That's why you don't see it on the indicators. I just happen to have the eyes to spot them when I see them. So I do see a hidden bear on here. So when market opens on Monday, this is an iffy trade. I wouldn't take a long position where we are now. If anything at all, I'll wait for a pullback. And if we get a pullback into this zone and find support somewhere around 6,438, if we do find support at 6,438, then I could be entering for the long position with the target in mind still somewhere around the 6,500. But until that happens, I stay out of the market in terms of long, and I'll wait for a confirmation break below this level, 64.38. Candle open and close below here would suggest to me that this sugar high bounce is already done its job, and we are back to the continuation of this momentum that occurred in the first 4 days of the trading session. Stepping into the weekly just to give us ideas of what the weekly looks like. Now, the weekly candle that we did print, technically, to me, this is a hanging man. Let me kind of take this off. Okay, this is a hanging man where price sold down and we push up. I wouldn't consider this as a hammer based on its location. The good thing is that it's a green candle, potentially suggesting that there is a chance that this could go up further. But um, it's one that you would have to wait for confirmation. Anytime you get a hanging man or an inverted hammers, you need confirmations before you take the trade. So just based on the weekly, this is not one that I'll place a lot of confidence on. Even though we did close above last week's high. I mean last week's closing. It's one that I'm not very confident to take a long on. So my bias is wait, get confirmation on XPX before entering a long. And if you want to enter a long, you want to make sure this 64.38 level, it's strongly supported. Candle open and close below this level suggests to me that this is just what you call it, the hanging man confirmation that is going to come down some more. And if we do look at the NASDAQ index as well, the NASDAQ 100, you would then actually see that the XPX actually is in a better place in terms of the hanging man candle that printed on the weekly. Here we did have another one, but it's a red candle as well, suggesting even more weakness in the tech sector, NASDAQ 100. So this is another one too that if I want to trade it, I would want to see some confirmations. Um, Stepping it down to the 4 hours, you would realize again here on 4 hours that we do have the similar setup. Pulled back into resistance right here. Okay, and it's just facing that resistance right there. So on the Nasdaq 100, is the same story. I would want a clear break of this upper resistance here before I'll enter any long. Potentially this is going to fall back down probably to this level of 22.9. um, Again, let's look at our indicators. Like I was saying, you've made a lower high compared to this high here, and this is a hidden bear where I'm talking about. you know so here, this high here corresponds to this RSI. Here you've made a lower high and your RSI has already made a higher high. That's an inverse divergence, and that usually results in a hidden bear that will show up. So here again, I would wait for confirmation as I see the potential danger before I'll enter any long position on the tech index. Daily wise, yeah, we're still at that same resistance, except that of course we have a cycle low on the daily, suggesting that we could potentially either consolidate here or we could push further up. Like I said, based on the lower time frame chart intraday, because that's where all the action took place. This big candle that erased about 2.5 days of price action is still looking very bearish in my eyes. So I would wait for a clear candle open and close above this level before I would enter a long position on the Nasdaq index. And finally, I would like us to briefly look at gold. As gold has still been in this sideways consolidation, trapped between the high of 34.41 thereabout and the low target of somewhere around 32.47. Still within this range, hasn't broken out yet, either to the upside or to the downside. Now, what do we think would happen in the next coming week? I think stepping down to the weekly chart, this consolidation is more likely going to continue. Um, we are not out of the blues on our MACD yet. RSI is still trending along the 50 on the weekly, suggesting the sideways trend is still there. On the daily chart, we have some momentum to the upside picking up on the MACD. as well as our cycle is pointing upwards, suggesting that maybe in the next coming week, we probably could come test these highs of 34, 38, thereabout, by the end of the week. So other than that, I think gold continues a sideways price action until we get a clear break of structure above this 34.41, where we'll be able to predict our target as the long consolidation has taken place. Once we break out of this, the target will be much higher because of all the consolidation that has occurred within this time zone. A few fundamental causes why I think gold could also break out of this structure is exactly what happened on Friday with Fed Chair Jerome Powell talking about cutting rates potentially in September. At the same time, the Fed is also facing the possibility of high inflation. So they are really in a tight spot. The labor market is deteriorating, yet inflation from tariff is also picking up, as we did learn from, I think it was Walmart as well as Target CEO that gave their forecast after the earnings report that mostly most of these retailers have been eating up their tariffs, but now that is kind of eating into their profit margins, potentially will be passing it back on to consumers, and that would definitely cause a higher inflation. So, with this backdrop in mind, I think gold would continue the sideways, and when the economy is in a stagflation, more likely as they keep cutting rate, the dollar will continue to fall and gold will probably continue to rise. So we wait for a clear breakout. We don't want to be ahead of the market. We just want to flow with the market. So with this concludes this section for the indices and the gold commodity. I thank you for staying with the entire time listening to my analysis. Have a great trading week. Cheers.